Shocking fact: by 2025, millions of homeowners in the UK could lose their homes, and it's happening faster than you think. As rising mortgage rates, skyrocketing energy bills, and a cost of living crisis continue to drain family budgets, many are finding themselves on the brink of foreclosure. But it doesn't stop there. What if job loss, unforeseen financial crashes, and even changes in government support are quietly pushing more people toward losing their homes? This isn't just a theory, it's a looming reality. Can you imagine what it would be like to suddenly lose the place you've worked your whole life to own? 2025 could be the year everything changes. Stay tuned to find out why. Number 10. Lack of financial literacy. A significant factor contributing to the risk of homeowners losing their homes in 2025 is the widespread lack of financial literacy. Many homeowners struggle to manage their finances effectively, often due to a lack of education on budgeting, debt management, and the complexities of mortgage agreements. This financial illiteracy leaves them vulnerable to poor financial decisions, such as taking on unaffordable loans, missing payments, or failing to plan for economic downturns. Homeowners with limited knowledge about their mortgage terms, interest rates, and payment schedules may not fully understand the consequences of missing a payment or what refinancing options are available to them. This lack of awareness can lead to a cascade of financial issues, where small mistakes snowball into significant debt. In 2025, many individuals could find themselves at risk of foreclosure simply because they didn't recognize the early warning signs of financial trouble or know how to seek help before it was too late. Furthermore, the absence of financial literacy also makes it more difficult for homeowners to navigate unexpected expenses, such as job loss or medical emergencies. Without the proper knowledge to adapt to changing financial situations, homeowners may fail to take proactive steps, like seeking professional advice or restructuring their mortgage, which could prevent them from losing their homes. The lack of financial education will continue to play a crucial role in the housing crisis, with many homeowners unable to make informed decisions that could protect their homes from foreclosure or sale. Number 9. Energy price hikes. Soaring energy prices are one of the major financial burdens hitting homeowners across the UK, making it even harder for many to keep up with their mortgage payments. In 2025, energy bills are expected to continue rising as the cost of gas, electricity, and other essential utilities increases. For homeowners already struggling with their mortgages, these price hikes can push them further into financial distress. Many families are forced to make difficult decisions, choosing between paying for energy to heat their homes or keeping up with mortgage payments. This situation could ultimately lead to missed payments and repossession. With energy costs consuming a larger portion of household budgets, homeowners may have little left to cover the monthly mortgage fees. The additional financial strain caused by increased heating, electricity, and fuel costs leaves fewer resources available for essential expenses, making it difficult to maintain homeownership. In severe cases, homeowners may default on their loans, leading to foreclosure or the need to sell their homes to pay off their debts. The increase in energy price hikes also affects the resale value of homes. As more households struggle to manage high energy costs, homes that are inefficient or expensive to maintain may become less desirable in the market. With energy prices expected to stay high, the long-term affordability of maintaining a home could become an obstacle for many homeowners, leading to increased foreclosures. The combination of escalating energy bills and financial insecurity will continue to put millions of UK homeowners at risk of losing their homes. Number 8. Increased rent prices. The steady rise in rent prices across the UK is putting additional pressure on homeowners, particularly those who are already struggling financially. As the cost of living increases, many people are finding it more affordable to rent than to own, leading to an exodus from homeownership. For some homeowners who are unable to keep up with their mortgage payments, the prospect of losing their homes may seem inevitable. They may be forced to sell their properties or, in some cases, face repossession, making them renters rather than homeowners. For individuals who rely on rental income from properties to help cover mortgage payments, higher rent prices can create a double-edged sword. While rent increases could theoretically boost their income, the high cost of rent in general places more financial strain on tenants, leading to delayed payments or even defaults on rent. If tenants struggle to pay, homeowners may face vacant properties or missed rental income, further exacerbating their financial difficulties. Additionally, with rising rent costs and property values under pressure, selling a home may no longer guarantee a profit. Homeowners who attempt to sell in a down market may be forced to lower their prices, sometimes leading to financial losses. This, combined with the mounting costs of homeownership, could leave them in a situation where renting seems like the only viable option. The increase in rent prices is contributing to a wider housing crisis, leaving millions of homeowners vulnerable to selling their homes or losing them altogether. As affordability issues continue to rise, many could face the harsh reality of no longer being able to own their properties. Number 7. Poor credit scores. Poor credit scores are another significant factor that could lead to millions of homeowners losing their homes in 2025. Over time, financial struggles like late payments, job loss, or rising debt can cause credit scores to drop. For homeowners facing financial hardship, a bad credit score can be a barrier to obtaining the help they need to keep their homes. With lower credit scores, homeowners may find it difficult to refinance their mortgages or obtain better repayment terms, making it even harder to manage rising costs or missed payments. Lenders often see a low credit score as a red flag, signaling higher risk, which makes them less likely to offer support. Homeowners who need assistance, such as restructuring their mortgage or securing a payment holiday, may be denied due to their credit history. This leaves them with limited options and increases the likelihood of foreclosure. In many cases, the inability to refinance or secure a new loan could mean that homeowners remain stuck with high interest rates and unaffordable payments, further pushing them toward losing their property. Moreover, as homeowners struggle to keep up with rising costs, the vicious cycle of debt accumulation can lead to more missed payments, further damaging their credit scores. As their financial situation worsens, they may become ineligible for assistance programs, making the risk of losing their homes even more real. In 2025, millions of people in the UK could face foreclosure due to their poor credit scores, which prevent them from securing the help they need to maintain their homes. Number 6. Repossession laws. Changes to repossession laws in 2025 could significantly impact homeowners at risk of losing their properties. In recent years, some protections were introduced to prevent swift repossessions, especially for families facing financial difficulties. However, these laws may be altered or become more lenient in the future, allowing lenders to act faster and with fewer restrictions. This would make it easier for banks and mortgage companies to initiate repossession proceedings against homeowners who are behind on payments. The potential easing of repossession laws means that struggling homeowners will have even less time to recover from financial setbacks or secure assistance. Once mortgage payments fall into arrears, lenders may be able to seize properties more quickly, leaving homeowners with little opportunity to catch up. For those in temporary financial trouble, such as job loss or sudden medical expenses, the speed at which repossession proceedings can begin could make it nearly impossible to save their homes. Additionally, if the legal framework surrounding repossession is relaxed, mortgage lenders may feel emboldened to take a more aggressive approach, pursuing evictions even when homeowners show signs of financial hardship. This shift in the law could push more homeowners into difficult situations, where losing their homes becomes almost inevitable. As repossession laws evolve, millions of UK residents will find themselves at a higher risk of losing their homes, with fewer protections in place to shield them from financial hardship. Number 5. Housing market decline. The decline of the housing market in 2025 is another major factor that could lead to millions of homeowners losing their homes. Property prices have been volatile in recent years, and experts predict that the market could experience a significant downturn. As housing values drop, homeowners may find themselves in negative equity, where they owe more on their mortgages than their homes are worth. This situation leaves them financially trapped, unable to sell their properties without incurring heavy losses. For those looking to refinance, the decline in property values could make it impossible to secure favorable terms. Mortgage lenders may become more reluctant to approve refinances or loan modifications, leaving homeowners struggling to stay afloat. As a result, many may face the hard reality of losing their homes to repossession or be forced to sell at a loss, further compounding the financial strain. Moreover, a sluggish housing market means fewer buyers, making it difficult for homeowners to sell their properties quickly if they're in need of cash or looking to downsize. The lack of demand in the market can also result in properties sitting unsold for extended periods, preventing homeowners from freeing themselves of a burdensome mortgage. As the housing market continues to decline, these factors combined will push many homeowners into a difficult position, with foreclosures on the rise. For millions in the UK, the drop in property values could be the tipping point. Number 4. Reduction in government support. In 2025, a significant reduction in government support programs for homeowners could lead to an increase in the number of people losing their homes. Over the past few years, various financial assistance schemes have been put in place to help struggling homeowners stay afloat, such as mortgage relief and tax breaks. However, as the UK government faces growing budget pressures, many of these programs are being cut or altered, leaving vulnerable homeowners without the safety net they once relied on. Without these essential government-backed initiatives, individuals who are already struggling with the rising cost of living and job insecurity will find it even more challenging to manage their mortgages. For example, housing benefits may be reduced, and other forms of financial assistance may be phased out. This leaves many homeowners without a lifeline when financial hardship strikes, forcing them to make tough decisions. Some may find themselves unable to meet their mortgage payments, leading to foreclosure or the sale of their property. In addition, the lack of government intervention could leave homeowners without the legal protections they previously enjoyed during financial crises. With fewer protections in place, mortgage lenders may be quicker to initiate repossession proceedings for those behind on payments. As financial support becomes scarcer, the number of homeowners unable to avoid foreclosure will rise, leading to millions losing their homes. The reduction in government support is poised to be a significant factor contributing to the growing housing crisis. Number 3. Job insecurity and unemployment rates. Job insecurity and rising unemployment rates are contributing to the growing risk of homeowners losing their properties. As the global economy continues to experience uncertainty, many industries are facing layoffs, hiring freezes, or reduced hours. This instability means more people are at risk of losing their jobs, and for homeowners, the financial consequences can be devastating. Without a steady income, meeting mortgage payments becomes increasingly difficult, leading to delayed payments or even default. For those working in industries hit hardest by economic shifts, such as manufacturing, retail, or hospitality, the chances of being laid off are significantly higher. This can force homeowners to rely on savings or other sources of income to maintain their mortgage payments. Unfortunately, for many, these resources are limited or non-existent, making it nearly impossible to keep up with mounting bills. As mortgage payments fall behind, homeowners may face repossession or be forced to sell their homes to avoid financial ruin. Moreover, underemployment, where individuals work fewer hours than needed to support themselves, can also lead to financial strain. With salaries being stretched thin, many homeowners may have no choice but to reduce spending or take on additional debt, further complicating their financial situation. As job insecurity remains a constant threat in 2025, the lack of stable employment will push more homeowners towards foreclosure or force them to consider selling their homes in order to avoid further financial distress. The reality of losing a home due to job instability is closer than ever for millions of UK residents. Number 2. Cost of living crisis. The cost of living crisis in the UK is making it harder for homeowners to keep up with their mortgage payments. Over the past few years, inflation has driven up the prices of basic necessities like food, utilities, and transportation. In 2025, this trend is expected to continue, putting immense pressure on household budgets. As essential expenses eat into their income, homeowners may find themselves struggling to prioritize their mortgage over other urgent costs. For many, the rise in energy bills and food prices will mean a tough decision: cover the mortgage or pay for necessities like heating and groceries. This financial squeeze leaves little room for saving or covering unexpected expenses. As more households find themselves stretched to their limits, some may eventually default on their mortgage payments. Those who are already living paycheck to paycheck are especially vulnerable, as even a small change in living expenses could push them into arrears. The economic uncertainty brought on by the cost of living crisis affects not just homeowners, but renters as well. With prices climbing across the board, families who are renting may face eviction, pushing more people to consider selling their homes or facing repossession. Even for homeowners with some savings, the burden of the rising cost of living could trigger financial insecurity that leads to them being unable to afford their property long term. In 2025, millions of homeowners may find themselves at risk of losing their homes simply because their income no longer stretches far enough to cover all the rising expenses. Number 1. Rising mortgage rates. The rising mortgage rates in the UK are one of the biggest threats to homeowners in 2025. Over the past few years, interest rates have steadily increased, and experts predict they will continue to rise in the coming years. As rates climb, monthly mortgage payments will grow, putting significant financial strain on homeowners who are already struggling with other costs. This surge in interest rates can make homeownership unaffordable for many, especially first-time buyers or those with adjustable rate mortgages. For those with fixed-rate mortgages, the impact might not be immediate, but as their contracts expire, they'll be faced with significantly higher rates when renewing or refinancing. Many households will feel forced to reduce their spending on other essential items like food and utilities just to meet the rising mortgage bills. The additional financial burden could even lead to the loss of homes for those unable to afford the drastic increase in payments. With rent prices also climbing, many homeowners may find it more expensive to stay in their homes than to rent. As property values fluctuate, some homeowners may face negative equity, where they owe more on their mortgage than their property is worth. This scenario can trigger repossession or force people to sell, potentially at a loss. The rise in mortgage rates is creating a perfect storm of financial pressures, and as 2025 approaches, it is predicted that millions could face losing their homes due to the cumulative effects of these increases. The reality of unaffordable homes is closer than ever for many people across the UK. The UK housing market is heading toward an uncertain future, and millions of homeowners could face the terrifying reality of losing their homes in 2025. Rising mortgage rates, a growing cost of living crisis, and job insecurity are just the tip of the iceberg. With energy prices climbing and financial literacy lacking, many families will be pushed to their limits, unable to keep up with mounting debts. The added pressure of reduced government support and potential housing market crashes makes this crisis feel almost inevitable for some. The next few years could be critical. Homeowners who don't act fast enough to protect their financial future may soon find themselves trapped in negative equity, unable to refinance, and ultimately forced to sell or face repossession. Repossession laws could become more lenient, giving banks and mortgage lenders more power to act quickly against those in financial trouble. This is a wake-up call for everyone to take financial planning seriously. Whether you're a homeowner or thinking of buying, now is the time to prepare for what's coming. And if you found this video insightful, don't miss our previous one on the hidden factors influencing the housing market. We pour a lot of effort into creating these videos, and your support means the world to us. Hit that subscribe button. It's just one click, and it helps us keep delivering the content you care about.